Palo Alto on a cloudy day. I want to welcome all the panelists of this amazing session for the next half an hour. We'll be talking a bunch of different topics on investment, entrepreneurship, do's and don'ts, and challenges. It's my pleasure to introduce the panelists today. We have Faye. Faye Sahai comes to us from Vinaj Venture. She's the managing director, and her investment area is digital wellness and mental health startups. Prior to that, she led an innovation fund. She was a Kaiser Permanent and was the global head of innovation at and digital business at AIG, and also went through the startup world, co-founded 3 startups like most of us, try, fail, and then succeeded. Our second panelist is James. You can raise your hand. James Drage is a long-time venture capitalist and also venture debt investor. You're based in Canada, but my understanding is that you invest worldwide. You're working with Heroiq Capital. Prior to investing, you had a number of successful exits and many learning experiences that we also call failures. Third panelist is Nikolai Oreshkin, who comes back.
Hi, everyone.
Hi there. Nikolai, like me, has an accent. We come from neighboring countries, started as an ISP provider in Belarus, really focused on offering internet access to people. Today, he sits in Silicon Valley. He's the founder and managing partner of Elysium Venture Capital investment firm. You focus your investment in California, but I also understand that you have strong ties in China and Europe.
Yes, we invest globally. Yeah,
globally.
we're based in California, but invest globally.
There you go. And then last but not less important is Jaleh Daie. Can you just introduce yourself in a few words?
Yeah, thank you so much, Silvia. I'm Jaleh Daie. Like David Coe, I'm a new transplant from Silicon Valley to Austin. And so we commiserate with each other about the nice climate in Silicon Valley. I am a biologist by training. I started my career in academia for 20-some years. And the last couple decades, I've been in investment, venture investment, and angel investing. So currently, I'm partner of Aurora Equity and chairman and founder of the Act Food Tech at the Bank of Angel.
Okay, thank you so much. So the way we're going to run this panel, it's we're going to make it spontaneous. I'll ask all of you to maybe spend 5 minutes or so introducing, what you do, what you're looking for, anything that is of interest to the public, to the audience, and then we're going through more of a Q&A session. So I think we're going to do ladies first. So Faye, the stage is yours.
Thank you, Silvia. It's wonderful to be with all of you here today in this amazing panel. So kind of from my background, as we're saying, is I'm investing in digital wellness and mental health. We've seen record-breaking investments and innovation and startups in the digital health area, as well as in mental health. We kind of have a silent healthcare crisis in mental health that COVID is just accentuated from that of like 1 in 4 adults and children are now experiencing anxiety, stress, depression, and suicidal thoughts from that standpoint. So there is an amazing opportunity to make a difference. And we've definitely seen the likes of Calm, Headspace, Ginger.io, a lot of M&A and interesting activity. So we're investing in early stage startups in the US and Canada in this area, and as well as just kind of bringing not only the venture capital background, but I've also worked in the corporate venture capital side as well as, and really looking at ways that we can kind of accelerate innovation in this area. So pleasure to be here as well, and great sessions, and look forward to kind of the discussion and where we're going.
Awesome. Thank you, Faye. In my list, James is second. So you want to give us a little bit, share your wisdom with us?
Not sure about wisdom, but thank you. Like Faye, our biggest area of interest right now, we call it behavioral health as opposed to mental health. We are more generalist investors. We've invested, we invest across a number of areas. We're based in Canada, but investing worldwide. We tend to invest in areas where we can get some leverage. In Canada, there's lots of nice government grants and tax credits. And so with Canadian companies, especially, we often invest alongside where, $1 of investor capital can unlock $1 of $2 or $3 of non-dilutive funding. So, areas of life science, medical device, digital health, digital therapeutics, even digital media. So we do some video game and children's entertainment, animation type companies. And so we're all over this place, but our big area of interest at the moment, and I think we'll talk about it a little more later in the panel, Silvia, is, what's changed since COVID. And, we've been big behavioral health investors for, over a decade, but we're investing more like private equity. We had a large chain of rehabs, inpatient rehab facilities. We had methadone clinics, and we exited both of those investments during the pandemic because the pandemic taught us that, really digital health scales. And we're looking for, ways to, number of lives positively impacted. With those previous investments, they made good money, but you could only impact hundreds, at best thousands of people. Whereas, digital health or digital solutions could impact hundreds of thousands or millions of people. And so we redeployed some capital, and, Faye and I will talk offline after the panel. But, we're very interested in behavioral health. Ending addiction is a big area of interest for us. And so, we have, followed kind of not just the trends, but, even the fact that we're doing this panel and, Zoom, each of us in a different area. A couple of years ago, we would have all flown into Austin, if we were coming to the conference, and we'd be sitting on a stage together, and it probably wouldn't be broadcast around the world. And so things have changed. COVID's made some things better and some things worse. But, and we also tend to be focused investors in niches, as I said, so behavioral health is big now. We also do a lot of investing in algae or algal technologies, which is not a normal area of interest for investors. But we find areas that are interesting to us where we think we can get some leverage with non-dilutive funding. And then we try to go heavily into those areas and try to get some support where we can, also get to know the other investors and the other people working in those areas so that we can make introductions and support the entrepreneurs that we're trying to support.
Yeah, thank you. Thank you, James. I think this is an extremely hot area. I think you rightly so, you are investing and the beauty is that you're moving away from, the traditional deep tech, but really bringing the social science part of it. Historically, we go back a few years, psychologists were not talking technology, psychiatrists, they were not talking technology. We were focused on drugs, therapeutics. Now we have a way to do it differently. So this is great. Thank you for your contribution. Nikolai, tell us a little bit about your story.
Yeah, awesome. Yes, I'm Nikolai. We run Elysium venture capital firm. It's an investment boutique that I launched together with my partner. We currently manage 2 funds. I invest across a variety of industries on multiple stages. We have a growth stage fund, we have early stage fund. For the last year, even though it was a pandemic, it was pretty successful. 3 of our portfolio companies get listed on the public markets. SEMrush got listed on New York Exchange. AppLovin with currently costs 40 billion, listed on Nasdaq, and Robinhood was listed also on Nasdaq. So was pretty amazing year for us. We do investment in start looking deals at the very early stage, and that is how we found Flow Health. Flow Health we supported from the inception, from the very first round, and now it's a company that became the #1 global health tech platform for women, which we're also very proud of. So we invest in both consumer tech and SaaS, enterprise, big data, fintech, look at pretty much everything. And because of our international ties, of our deal flow comes from the United States, but we are happy to help companies to gain global traction.
Okay, thank you. I know, Jaleh, you already gave a brief intro. I don't know if there is anything you want to add in, considering what the other speakers have mentioned. You are on mute.
Sorry. I would add a little bit more in terms of what we invest in and the stages. Well, I have obviously 2 roles, both at Aurora Equity and the Band of Angels. At Aurora Equity, we are agnostic about the area of investment. We invest across the board, mostly seed and Series A and B. At the Band of Angels, I am chair of the Food and AgTech, but that Food and AgTech is not just limited to food and agriculture. It also includes what we call health span, which includes aging, wellness, mental health, all kinds of things that the other 2 colleagues already mentioned. So anything that is digitalized in those areas, health span, excluding therapeutics, we invested. So environment also is included in what biotech, environmental technologies, they're all included in that food and ag moniker that we have. And at the Band of Angels, we do seeds and sometimes Series A, but mostly seed.
Okay, thank you. So I am going to ask, and I apologize because this is probably a cliche question, but I feel like I need to ask all of you. We went into a pandemic 2 years or so ago. Things are changing. Personal perceptions are changing. The sentiment of the market is changing. What do you see as shift of investment from 2019 to today? Yesterday, we had a great session and one of the speakers showed actually a decline in pre-seed investment versus an increase in VC funding. It was pretty stark difference. I think VC funding was up 90% and pre-seed investment was actually a negative number. So, and this begs the question, are we becoming more conservative in our choices? Do we prefer something that is, more revenue focused and less, risk prone? Reality is that if you look in history, after every major, tragedy, a war, a pandemic, there is a rebirth. There is an opportunity for growth, and those who know how to capture the wave will be very successful. So please do share your thoughts.
I kind of start because I wrote some articles right a few months after the pandemic to sort of forecast what is going to be happening in this area. So I did a few things. I got a few things wrong and a few things right. So the things that I got right was inflation. I predicted there's going to be inflation because of all the disruptions in supply chains, that at that point, everybody thought, oh, this is going to go away. But what I got wrong was that I thought we would become more conservative and invest less, or a smaller check sizes. But it turns out, because the government stepped in, both fiscally and monetarily, Feds and the Congress, poured so much money into the system, the investments just flew off, and people would just not consider anything about valuation, et cetera, et cetera. Now, 2 years into that, I think there is another turning point right now this week. And that turning point is the testimony by Fed Chair Jerome Powell, when he said he's going to start reducing the liquidity in the market, maybe raising interest rates. So it's not going to be like the last 2 years. I think we are just beginning to be conscious about valuations again. So the last couple of years, because of all the free money that came into the market, we were just, thoughtlessly paying any valuation. But now I think we are going to go in a period when valuation sensitivity comes back.
Oh yeah, no, such great points. I'd love it. You should put your article in a link in the chat too, because I'm sure a lot of people, including myself, would love to see that article.
My LinkedIn, you would see it there.
Wonderful. Definitely agree. There's definitely been shifts. A lot of people have talked about the great resignation from that, and estimating 25% of the workforce is going to resign within this quarter. And as Silvia, you mentioned it, the great rebirth. I've been thinking about it as a great reset. We've all had this opportunity in this 2 years to kind of reflect and look at what we're doing, our sense of purpose, what's happening in the world and where we are. So we've definitely seen investments grow, record-breaking in areas, as we mentioned, digital health, but technology, where we're going on digital payments, consumer tech, and, retail from that standpoint has gone down, right? And travel. So there's not all are winners in this, but it has been this great reset. I think from the venture capital and startup world, one of our criteria is we always like to physically meet people before we invest in them. And that had to go out the window, right? Okay, that's not going to happen. And so we had to quickly pivot to what is this virtual relationship? What is investing into people that you've never physically seen, only just on a little box on a screen, and talk to them, and this whole relationships and sense of connection, I think has been so interesting. In one way, James was just saying it, right? We would have been in a conference room all together, but now we're all virtual, we're streaming live. So in one way, you're missing that physical, but now there's this whole world that's opened up to you. We all experienced this, I think, really for the first time, that our world has experienced a pandemic simultaneously together. So that brings us all together. So I think it's been amazingly fast. We've had to kind of pivot in multiple sense, but we've also seen kind of a rebirth in entrepreneurship. As people were transitioning out of other jobs, they have said, why can't I start my own? Why can't I? We've seen more venture capital funds being raised. We see more startups being. So I think this is a very interesting time. I do wonder, like Jaleh, that there is concern about increased regulation, tax implications, what's going to happen with some of things that allowed waivers, that allowed quite a bit of innovation and government funding. What will happen in the future of that? So I think it'll be a really interesting time.
Hey, Faye, you were talking and I came up with, spontaneous question. How do you, slides are great. I am a master of putting stuff on slides, logos, numbers, and all these beautiful things. In the past, you were probably meeting some of the founders, you were getting to know their personality, because at the end of the day, it's not the slide that makes the win. It's the willingness of people, it's the passion, the drive, and of course, their experience. How do you guys do it today? What is your qualification process, and has it changed with the with the pandemic?
Would you like me to answer first, or Nikolai and James? So, how has it changed? For us, it may mean a little bit more virtual meetings to really get to know the individual. We also talk to a wider breadth of the team. We interview team members. We talk to a customer reference call. So we've had to depend a little bit more on that kind of wider breadth on the due diligence process to really understand that person. We've also looked at ways that we, to kind of accelerate. I think James is talking about it in the sense too of like, how can we help some of these founders? So we've in a sense opening up some like workshops where we actually open up of how our process, we help mentor startups. It doesn't mean we're going to invest in every one of them, but it gives us a chance to get to know them as individuals as well. So we've been creative. I'm trying to build these relationships, and with a founder's willingness to change, grow, and evolve has been an important one for us. They're willing, how they take feedback has been a critical one. How do they take input? How are they able to pivot in the market? But I'll turn it over to our other panelists to respond as well.
Yeah, so a great question. And of course, the entire pandemic situation is very unfortunate, and unfortunate for many traditional businesses. But since we're here, represent tech investment side and venture capital that exists in Silicon Valley, pretty much support only tech companies. And for tech, that was that accelerated quite a lot. So accelerated, first of all, adoption of the technology that comes into the regular population, and it also simplify many decision-making processes for venture capitalists. What type of businesses would work in the next decade or 2 decades? Because we need to think in advance. And regarding the personal communication, it also accelerated many things in terms of the meetings that we can take. Let's say 2 years ago, to participate YC demo day, you can schedule only 5 to 10 meetings a day, and that is your limit. And now after YC demo day, let's say you can schedule back-to-back Zoom calls like 15 to 30 minutes, and can make double or triple out of your normal quota of having those meetings. As a downside from VC standpoint, the valuation of a lot of companies that currently raising somehow jumped up, and we've seen the company on early stage that doesn't bring much value yet, with a much higher market capitalization because of the kind of future opportunity and that market scales for their segment. One thing that pandemic educated us, it is trust. It is how to trust to portfolio companies, to the founder who you never seen in life before, and the only thing the only way you can talk to him only through the Zoom calls or phone calls, or kind of in this virtual environment. I guess it still has some disadvantages, but I believe that in many cases it stimulates the pace of investments and also requires some discipline from the founder. So to have this bonding that actually they work with the actual real people and venture capitalists who put their money into the companies, kind of it requires additional motivation and discipline for founders to not let it go and just to work harder, even though they kind of locked in the environment.
I guess I'll go since I haven't said anything. To go back to your initial question, Silvia, I think one of the things that we've seen, at least, and it's a trend that's been coming for a while, but as Nikolai said, I think the pandemic accelerated it. Not just technology adoption, but an interest in diversity, in impact, and in purpose. We're certainly much more interested now in making investments that have a clear purpose or a bigger purpose that can demonstrate an impact beyond, will generate ad dollars is no longer that exciting. We want to know, how will you positively impact the users of this technology? How are you making the world a better place? And I think diversity as well. I mean, I can say that, when I first started investing, we just invested in the idea. We were agnostic as to who the leaders or the founders would be. And now, we're very much cognizant of, who's on the team. Do you have minority representatives? Do you have female representatives? Do you have a diverse voice? Because I think, in order to succeed, what we're finding is that, it's not, the bro culture doesn't make it anymore. That probably worked in Silicon Valley a decade ago, but it doesn't work anymore. And so, there's a backlash generally in the bigger sense of the world. And so, if you want to be successful as an investor, you have to invest in what is likely to be successful. And I think we've learned over the last decade, but the pandemic, I think, accelerated some things. Certainly, what's acceptable, especially, I'm in Canada, which is somewhat lucky, but in the US, things are bifurcated, and, there's sides. And so you want to stay away from those things. But I think the idea that purpose and impact are much more important now. And so from our perspective, not meeting people in person, the story that you tell is very important. And the story better have some component that can speak to purpose or impact, or at least we will not listen as much, or, we'll tune out a little bit sooner. If all you have is, we are going to make a lot of money and we're going to exit, everybody tells that story.
Yeah.
We want to hear more. What's the deeper part of the story?
Absolutely. I think you're 100% right, 120% right. The reality is that this community, the community that is talking today, is a community of professionals. And we have gone through, we started as engineers. I started as a mathematician. I wanted to have a career, in academia. Jaleh did the same. We went through a ton of experiences. And when you get to a point where the value of give back and pay forward becomes extremely important. And there is nothing better than matching that with, success, seeing something growing, seeing something being of service to the community through a product, through a service. So that very well said, James.
May I add a comment? I want to be the devil's advocate here. And forgive me for that. But I just want us to keep that in the back of our head. I am old enough to be your grandmothers, all of you. So I've been around the block a few times. I've seen so many different cycles. I lost so many companies in the 2008, and I lost tons of retirement money in 2000. So let me say this, just as investors, I know you're going to do what you're going to do, but from my perspective, I know that social impact is very important. I've always been in the business of sustainability and diversity for 40 years now. But I would tell you this, I've seen it happen. When the money is flowing, like we've had the last 10, 15, 20 years, good causes like social impact, diversity, they come to the forefront because profits and money is not an object. When things get tighter, profits and margins take precedence over anything else. So I hope that the way we are right now about social and diversity would continue the way it is, but I'm afraid that corporations would have a different mindset when money becomes tight.
Yeah, I agree a little bit, but I will say, our latest fund, Heroiq, we registered as a B Corp. And so, the fund is a B Corp. And so the fund looks after all stakeholders, not just the investor side. And, anybody who we work with, pledge investors, LPs, they all have chosen to do so understanding that it's a B Corp and that, investment return maybe, it's not that we don't look at it, it's that we'll take a longer term view. And that, we believe that the long term that doing the right thing actually wins. And so I do believe, I do understand what you're saying about cycles and so on. But I think what's happened is, I think we make progress up the ladder. Each cycle, we move another rung up. And so we might come back a little bit, but we'll be further ahead than we were at the last cycle because more people.
Yeah, we would be ahead of 10 years ago. But
Yeah.
I'm saying that when money becomes tight, people's mentality changes.
Yeah. My hope, I think I'm on kind of the James side, is we take 2 steps forward, and Jaleh, to your point, it might be 1 step back as things tighten up a bit. But my hope is that there's still kind of progress to where we're going. I think the move to stakeholder capitalism, which is just only shareholder capitalism, where we're going with ESGs, a new generation that is not going to really kind of stand by from that standpoint. So, and all these new funds, B Corps, as James was saying, but all these new funds that are actually targeted at diversity, impact, and where we're going. So there's some hopeful trends, but we did see, decrease in women investors during COVID too, right? Like a small dip, we had made progress. So, to your point, there is that what is happening is people were investing in who they know, and who they know was the traditional, right? So, because they couldn't make those relationships in this virtual, but I think, we're coming back from that standpoint, but, all great points.
Thank you, Faye. I want to switch context a little bit. So I am, I had a 4-point-something GPA out of high school. I made it to Stanford. I went through their programs. I got an MBA. I have an awesome idea. What do I do next to get in front of you? David is doing an amazing job building a community that today I believe has like 20,000 plus followers, 100,000 viewers, but we need more Davids in the world. What's your suggestion for me? I'm here, I'm burning, I have my slides, I went through Ido's presentation. Ido is doing an amazing job democratizing this knowledge that he has accumulated over the years, but I still need to get to a meeting with you. Where do I go? Do I go to Austin? Do I stay in the Silicon Valley? Do I ping you on LinkedIn to that?
Silvia, I can give you advice what not to do.
Exactly. Very good.
At least it's never worked out in our case. I'd say cold messages doesn't work. It doesn't make sense if you cold message or try to catch the investor just like it is, whatever. Regardless how beautiful the slide deck is and how well you prepared, tried to ask for an introduction. Reach out to the portfolio companies. You can Google online. You can Google. You can search in a pitch book on a Crunchbase or AngelList on the website of the fund. See the portfolio company. See someone who is somehow associated, maybe through LinkedIn network, and ask for an introduction. Warm introduction increase your success rate dramatically. So that is my 5 cents here.
Thank you, Nikolai. I couldn't agree more. I think I'm a live example of this. I went through my I started low, I went up high, and when I had to look for my next job, I couldn't do cold calling. I mean, nobody was replying to me. I had to work through the network, through my network.
Yeah, I would just also add, like Founders World, doing your pitches in these like global forums, the accelerators, getting that recognition, being able to kind of hone kind of where you are, being together with other founders, I think is very helpful, because just as all of us investors are here, right, we're being able to see this cohort from Founders World and looking at that. I would say, I'm trying to be as inclusive as possible. So I do take cold calls. So if people ping me on LinkedIn or going through our website, we actually accept submissions there as well, because I want to hear as many ideas as possible from that. But to your point, as Nikolai said, it does really help to have a warm introduction, but I'm open, to kind of get cold messages, and I'll just if you put the one pager there, so at least gives me something versus I just want to meet with you, it doesn't help. So give me about your background, why I should meet with you, why do your research on us, know what stage I'm investing in, what industry I'm investing in, my portfolio companies, how you're different. So give me a compelling reason to connect with you. So.
Yeah, and I'll add, in addition to coming to general, investor conferences like this, if you're in, the behavioral health space, there's a bunch of conferences and associations where people that are in that space gather. If you're in the, SaaS world, there's a bunch of SaaS conferences. Go to those things and get to know the people, because as Nikolai said, the best people to make a warm introduction are the people who are leaders in a particular space. And so if you're trying to break into a space, go hang out where people that are already the leaders in the space are. And especially nowadays, it's so much easier because most of these things are on Zoom. And so, in the past, you would have to fly to San Francisco, so we dealt with lots of Canadian companies that we would say, go to San Francisco, go to Austin, go to Miami. Now they can get on a conference, but if you're not going to the conferences that are part of your industry, that doesn't say a lot to us about the fact that you're going to become, because we want to invest in the startups that are going to become the leaders in the industry. And the way you do that is to be part of the industry.
Absolutely, absolutely. Thank you. I want to do a quick time check with David here. We have a few more minutes. I don't know, David, if you can give me a ping. If not, I'll continue. So before I open for question to the audience, I'm going to improvise a little bit. I would love for you, panelists, to ask each other a question. Be nice, be graceful. They don't have their answer prepared. The question was not shared before, but I would, I would love to, if you could ask each other a question. Whomever wants to start.
I'd like to ask a quick question. Maybe how does James and Faye and Jaleh, how did you get to the venture industry? What was kind of the stimul to get into the to the other side, not to the dark side? Why and how?
Since I made a big jump from academia to venture capital, so I've always been an entrepreneurial type. So if that is in you, you want to be in this space, either as an entrepreneur or investor looking at entrepreneurs and support. So if you don't have the entrepreneurial sort of constitution and DNA, I would say stay out of this business, because risk-taking, educated, calculated, strategic risk-taking is what it's all about. I was always like that. So faculty position, even though I was there for 20 years, was kind of too narrow for me.
And I would say I came at it from the corporate side, corporate strategy, innovation labs, innovation funds. So doing corporate venture capital. I'd actually encourage all of you too, of really looking at, there's now interesting crowdfunding kind of platforms that you can now be an angel investor. Try your hand at it. To Jaleh's point is this something that excites you? scares you, your interest in this area. So there's a real, I think, opening up and democratizing of it, of where you can actually kind of crowdsource and crowdfund some of these startups, explore, go to multiple forums such as this, explore your passions, network. There's some wonderful kind of VC job boards too, fellowships, training kind of programs as well. You know, I'm happy to share those as well. But, you know, I think everyone's path, as we just seen, witness from this panel, is all different from that. So wonderful question.
Yeah, and I'll say, you know, mine is kind of, you know, everyone here will probably relate, but the joke we tell in my family is I was in M&A and then I did a few startups. And after my third startup exited, my wife said, I never ask for anything, but please no more startups. And so I was too, you know, I didn't know what else to do. So I became an investor. It started really as, you know, an investor through a family office, and eventually grew into, you know, one where, you know, you realize as you pool funds, you can have a bigger impact. But, you know, the joke is no more startups, please.
Amazing.
Okay, any more questions to ask each other? Nikolai was brave enough to go first.
I would ask for all of you, what's something that you wish someone would have given you as advice as you started on your journey?
You know, I'll say that, you know, that it's okay. You know, everyone hates the word pivot, but it's okay to change your plans. You know, I know my early startup, my first one, we thought we had came up with a better idea, but we wanted to be true. You know, investors had invested in us in a particular pitch. So we stuck with that pitch and just worked really hard to make it work, as opposed to, you know, being, you know, we were afraid almost to go back to them and tell them that we think, you know, what we pitched you originally was actually not as good an idea as we told you it was going to be. But, you know, so we were afraid to maybe do that. And, you know, I would say, you know, if you find a better idea, be upfront and talk to your investors early and gain their support. Don't try to, you know, hide it or game the system. And don't be afraid to go to a bigger idea, but also don't give up too quickly. You know, most of us entrepreneurs are, you know, squirrels with ideas. And so, you know, you have a new, better idea every day. So, you know, make sure before you pivot, also test this new idea, get some traction, get some validation. And, but if you have one, don't be afraid to move.
Yeah. Okay, maybe I can add a few words on here. So when I made my switch, I left voluntarily my tenured academic position and all of that, I knew that there is going to be a change in my mental model, because succeeding in academia is very different than succeeding in business. So I knew that I could do the switch in my mental model, but I never realized how important that switch in mental model is going to be. So when you try to make a switch like this, take a deep look at yourself and see if you are one of those people who are capable of significant mental switch, not just a small tweaking of your mental model, but really significant. So if you're mentally not flexible, the switch is not going to be successful.
Very, very, very much true. Thank you. Thank you for those words, Jaleh. Okay, I think we are at the end of our wonderful panel. I wanted to thank you again for your presence, your time, your dedication. I know your time is extremely valuable. David, I'm going to pass the stage back to you, the virtual stage back to you for, I guess, closing remarks. Thank you, and everything is being recorded.